Hi, Jonathan York from Bay Financial Partners, looking at the investment market. Another very strong reading on the inflation data coming out of the US, year on year, kicking in at 5.4%. And that's taken a little bit of shine off the market because certainly corporate earnings are still pretty strong out there, and the debate just rages on in the US about this sort of inflationary impact and whether it's going to be sort of longer term or more sort of transitory as the economy reopens and then sort of gradually gets back to a more sort of normal stance. But certainly with a figure like that, 5.4 year on year, the Fed is obviously keeping a sort of close eye on it. Their commentary so far has been that it is sort of short term, it is transitory. Potentially they're looking at sort of starting tapering, which will be easing off and reduction of the sort of asset purchase 2022, with rate increases then coming through, sort of first rate rises coming through in 2023. Now, obviously, that's all subject to, firstly to an economy keeping on a really strong rate. Certainly, GDP is still looking pretty strong for 2021 in the US. And so far, after the big sort of July the 4th holidays, you haven't really seen a major sort of spike in cases of COVID as well. So that would imply that the US sort of vaccination program is sort of working, and certainly they're cranking that out pretty hard to get everyone vaccinated in the community. And obviously, adding to those inflationary pressures has been oil, and that's really, in a case of sort of, increased demand coming through as economies are reopening, get a lot more people sort of traveling now, certainly in the US and also globally as well. So WTI holding comfortably above that sort of 70 bucks, and it's just going to be interesting because so far OPEC haven't really come to the party and increased supply yet. Now, certainly in the UK, it's going to be very interesting to see how it sort of plays through in the next sort of 2 to 3 weeks. Sort of Freedom Day, July the 19th, is when the economy fully reopens. Boris Johnson is adamant that is still going to take place, despite the large increase in cases with COVID, now up around sort of 25,000 new cases a day. And potentially, with the economy fully reopened, some sort of experts sort of predict that could be as much as 50 to 100,000 new cases a day. That will be very interesting as well to see after the big sort of football tournament has just finished, with a lot of people sort of mingling, not a lot of social distancing out there, see what sort of increase that shows on the COVID cases in the UK as well. Potentially the UK could sort of undo all the good work it's done. It's only had a pretty rough time over the last sort of 12 to 18 months. And now, with Johnson adamant the economy will fully reopen, restrictions will be sort of reduced to a bare sort of minimum. Masks won't be compulsory out there, and this is going to be very interesting to see how it plays through, because certainly the new Delta variant does seem to be pretty widespread in the UK, and that is leading to many increased cases. Whereas Europe appears to be a little bit more sort of conservative in its sort of reopening, and certainly at present the cases aren't quite as great as the UK, and it'll just be interesting to see how that sort of plays through over the European summer. In Australia, the latest COVID outbreak in New South Wales really still pretty rampant, getting just over 100 new cases a day now in the sort of Greater Sydney area, and that sort of led to certain sort of areas now being placed in further lockdowns, further tighter restrictions out there, really just trying to get on top of this virus. So far, though, it does seem to be limited to the sort of New South Wales and sort of Sydney area. The other states in Australia haven't really seen a huge spike in cases. Some experts, though, predict that the lockdown in New South Wales potentially could run until the end of August. Here in New Zealand, after the pretty strong and robust GDP for the first quarter, it's going to be very interesting to see the rhetoric that comes out of the Reserve Bank today. Now, certainly, while no one's expecting any change on rates, and that really won't come until sort of 2022, it is widely anticipated that the commentary now will be preparing the market for an increase in interest rates. Whereas most analysts and economists sort of didn't really anticipate any rates increases until sort of late 2023, maybe 2024. So potentially now you're looking at least one interest rate rise in 2022, potentially two. But as discussed, the Reserve Bank is really going to walk a pretty tight tightrope out there, because with the OCR at 0.25, to take it up to 0.5, that's a 100% increase on the OCR. Obviously, tourism is still being hit pretty hard by this sort of suspension of the Trans-Tasman bubble between New Zealand and Australia. Because certainly, obviously, COVID, while not sort of present in New Zealand in the community, there's still quite a bit of debate and discussion about the rollout of the vaccination program here. And, most analysts now predict that despite what the government is saying, doesn't really appear to be on track. That was really highlighted by two vaccination stations in Auckland running out of vaccines earlier in the week. Because certainly, if you're looking at any potential reopening of the border, you really need to see the country fully vaccinated. And they should be checking your KiwiSaver balances because over the next sort of week or so, that government contribution should be paid into your KiwiSaver accounts. Now, obviously, in this low interest rate environment, it is pretty tough out there looking for income options, but there are plenty of alternatives available. And if you're interested in discussing what is available, let's say go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.